Buffett's thoughts on energy and more on this Energy and Materials edition of Industry Focus. Greetings, fools. Sean O'Reilly joining you here from Fool headquarters in Alexandria, Virginia. It is Thursday, March 3rd, 2016, and joining me to talk Buffett, Brazil, and Greek tragedies is Tyler Crow and Taylor Muckerman. How's everybody doing this morning?
My God, what a show we have in
Sounds like
store.
we have a really busy day.
We've got, 5 stories?
We got a lot to talk about.
We got a lot, yeah. So before we jump into Buffett's thoughts on energy from his annual report and ExxonMobil's troubles in Brazil, we would be remiss if we didn't talk about the recent indictment and demise of former Chesapeake Energy CEO Aubrey McClendon. Any thoughts come to mind, guys?
When I heard the story yesterday, if anybody has not heard, I'm sure they have because it was plastered over any financial news.
Top of
everything yesterday. Aubrey McClendon passed away in a car accident one day after being indicted on charges of rigging land leases in Oklahoma, basically kind of colluding with another company to say, you know, we won't bid on this one if you give us a little bit of a lease price, and then we don't have to, try to outbid each other on these leases. That was the basic premise that they were going on for the court case. But when I heard the story that he had passed in a car accident, which I think all of us have kind of said sounds pretty suspect in the first place. Anyways, it kind of felt like the personification of a modern Greek tragedy. The idea of somebody just rising so high as a superstar in the shale boom in 2011, 2012. Everybody knew who, at least in the energy patch, knew who Chesapeake Energy was, and the monstrous amount of work that they were doing is getting out land. They were just trying to own everything on the shale patch, and like Icarus, he kind of flew a little too high, and everybody wanted to take a hack at him.
What do you think, Taylor?
Sucks. I mean, anybody dying that soon? But yeah, unfortunate timing.
He was late 50s, right?
Yeah, I don't know.
56.
But he's a big reason why we are doing what we're doing in the oil and gas industry in America right now, around the world even, because the technology is spreading pretty rapidly. So a pioneer that, whether it's true or not, all these allegations, it's unfortunate that he won't be able to at least defend his name.
Yeah, cool. All right, well, moving on. Everybody's favorite 80-something-year-old billionaire investor, Warren Buffett, just came out with his latest annual letter. I know when I was a teenager and first getting exposed to investing, this was like, I don't know, it's kind of like Christmas for long-term investors or something.
He's like the uncle that you want to have advice from. You know what I mean?
Right. As opposed to the uncle that you
the one that you avoid at Christmas parties and Thanksgiving.
So not a huge portion of his comments in the letter and everything. He did have a few interesting thoughts on electric utilities. And Berkshire Hathaway Energy is obviously a big part of his operations. In fact, I think he says it's the second biggest part outside of insurance. I mean, correct me if I'm wrong here. But he said, I actually wanted to get your thoughts first on this. In its electric utility business, our Berkshire Hathaway Energy operates within a changing economic model. Historically, the survival of a local electric company did not depend on its efficiency. In fact, a sloppy operation could do just fine financially, and the reason being, basically the local government guaranteed them a certain return on investment. That is changing, and he goes on to note that today society has decided that federally subsidized wind and solar generation is in our country's long-term interest. He goes on to talk about federal tax credits, the investments that they're making to take advantage of these. Did you guys have any particular thoughts on what might be useful for our foolish listeners, given Buffett's insights?
I mean, it just shows the advantages of running a utility like a business rather than like a company that's guaranteed income. Right. All of his utilities that he's picked up and transmission assets that he's picked up have become more profitable, safer, reduced headcounts. So it's showing that if utilities do want to get serious about their profitability and the business metrics that investors can focus on, you can change the game. And then with renewables, I mean, they own an astounding amount of wind.
They're the largest.
I think 6x the second competitor in terms of wind and solar power generation. 7% of the U.S. is wind, and 6% of the U.S. is solar electricity generation. comes from some Berkshire Hathaway holding, which is pretty impressive and I think a little bit under the radar for most people. When you think about Berkshire, you think of the railways, you think about some of the oil services companies that he owns in terms of equipment that they provide, and then obviously the insurance businesses. But to be that big of a player in renewable energy, kind of under the radar, is a big surprise.
And with the amount that he's actually still plowing into it today,
billions,
it's billions of dollars, maybe not annually, but pretty darn close
Yeah.
to that. And when you look at those investments, obviously with those federal tax credits, we don't know how much longer they're going to last. I mean, there's some plans, at least with like residential and things like that, where we're going to push it out for another 5 to 6 years. So we could see certainly Buffett making large investments over the next 4 or 5 years because it is such a lucrative investment with tax credits, with all the other.
It's kind of a sure thing.
Right. And with the amount of cash that Berkshire Hathaway is generating today, it's a pretty lucrative investment. In an interview that he actually did following up the shareholder letter, they kind of got into the argument that they've been having lately because one of his utilities, NV Energy, which is part of that utility group, is in a bit of a spat with
This is in Nevada.
in Nevada with Solar City and other residentials, basically on the premise of net metering and who gets to sell back and forth. And you can kind of go both ways with it. From the individual standpoints, like, well, I have to buy energy at 10.8 cents per kilowatt hour. Why can't I sell it back at the exact same price? And then on the utility side, it says, well, why do we have to buy energy back at the utility price when we have to transmit it? We have to, basically upkeep everything when we basically get zero profit on anything that happens there. So, I haven't quite found my final verdict on this yet. I mean, being both a Berkshire Hathaway and a Solar City investor, I'm kind of have conflicting interests.
You've
on
got
this one.
the devil on one shoulder and the angel on
Exactly.
the other shoulder,
So,
and you're just like,
they both make very valid points, and it's certainly something I'm going to be digging into over the next several months, trying to figure out how to wrap my head around it.
Taylor, before we move on here, I did want to get your thoughts. Berkshire Hathaway's energies, the energy segment, its earnings weren't up a lot. In 2014, it generated just under $2.1 billion in net earnings. And this past year, they generated 2370, so just over a $270 million increase. But 170 of it came from a Canadian transmission utility that they bought in late 2014, so not much of an increase. So one, why aren't their earnings going up much? And two, what the heck is this Canadian transmission utility?
Basically, it's Altalink is the name of the company that they purchased. It still remains under that name. Big player in Alberta, and they've been completing some transmission lines to bring wind energy to greater areas of Canada. So you're seeing that renewable energy portfolio carry over to this company as well. Several $1 billion in assets, looks like almost $6 billion at the end of 2013, and Berkshire paid almost $3 billion for it. So a little bit of a discount to what their assets were worth back then. But you're looking at this company continuing to grow, pour money back into the business, and it's transmission, and they're not generating anything. So it's just moving power from area to area. But I wouldn't be surprised to see them get into the power generation game given their assets.
Cool. Okay. All right. So moving on. At what point does an oil company say no? As noted in a recent Bloomberg piece, Big Oil moves to drill in Brazil, not because things have improved. Both Royal Dutch Shell, via its likely BG Group acquisition, and ExxonMobil are being forced to drill offshore of Brazil, or they risk losing leases that they have already bought. Guys, is this fair? Could this be good in the long term because these projects take such a long time to get going and produce and everything?
This is one of those weird situations where, like you said, when does a company say no? It's almost kind of like the gambler's dilemma. Is like when you're up, or when you're down, can you recover? When do you walk away? Because of the concept of a sunk cost. Basically, when all these companies went into the Brazilian gold or black oil rush that happened 10, 12 years ago, when the pre-salt fields were found, and everyone was really excited about what's going on down there, and they spent a ton of money on leaseholds, basically saying we're going to go drill these and we want to own the rights to them. Nowadays, they're 10 years up. We're in the middle of a major oil price crash, and the due date to start these projects is starting to happen. And, it kind of gets to the point, it's like, well, they could do it. Certainly they have the resources if they really wanted to, but they don't want to spend the kind of money. When do those, leaseholds just basically become a sunk cost and they have to walk away? And that's one of the things that I'm not certain as to whether it's the right idea, because as we've seen with shale and some of the other kind of faster development cycle things, perhaps it's going to take a long, long time for deep water projects to get the economics that they're looking for.
Yeah, some of the fees that these companies will have to pay equal the amount that it costs to drill a well anyway. So that kind of helps the decision-making process. But it is unfortunate for these energy exploration and production companies because, their hands are kind of tied. You saw a lot of it happen in the U.S. during the shale boom, early days when leases were starting to come up for renewal or expiration. And 2012, when shale gas prices were like less than $2 per million BTU, or right around that $2 mark, after being north of 10, companies were forced to drill, otherwise they would lose these leases. So similar situation here. Unfortunately, prices are still low, so they're being forced into it. But I think the big beneficiary here could be, if they do decide to drill, would be offshore oil rig companies, because they've seen a lot of contracts be shortened or completely written off by Petrobras and other companies down in the Brazilian waters. I know a personal holding of mine, Ensco, has lost a rig or rig time to Petrobras. They have 4 rigs down there right now.
I feel like every rig company has lost something to Petrobras one way or the other.
Maybe Petrobras doesn't pick them back up, but maybe BP does, maybe Total does, maybe Shell or Exxon, these companies that could be forced to make that decision. Maybe they needed an extra rig to pick up, and companies with experience down there, rigs that were originally built for the Brazilian pre-salt fields, would have a unique advantage to getting back in there earlier than maybe they had expected.
Cool. All right. Well, before we move on, I wanted to point our listeners to focus.fool.com, where you can take advantage of a discount on the Motley Fool Stock Advisor newsletter that works out to $129 for a full 2-year subscription. Once again, that is focus.fool.com. All right, so guys, is ExxonMobil finally going bargain hunting? They're obviously, the biggest, the baddest integrated oil major. They are not on the ropes, although stock's seen better days. They just announced a $12 billion debt offering. What are they going to do with this money? They're going to do a little bit of shopping, because obviously prices are pretty low right now.
I mean, if there was a time to do it,
now would be it.
Now would be it. I mean, you can kind of leverage the fact that ExxonMobil has a credit rating better than the United States Treasury. And, we could say it, $12 billion is certainly an attractive thing. And considering that this past year, this was the very first year where ExxonMobil did not 100% replace their reserves in a very, very long time. And for some, that can be concerning. At the same time, with companies that have attractive leases or attractive land holdings that could fit well into an ExxonMobil portfolio, it's kind of that quick hit. We can replace reserves very quickly at probably a price that is less than what it would take to go out and actually explore unknown reserves. Mm-hmm. So, kind of the economic cost or the risk costs involved with exploration could be out there. So certainly looking at shale across the United States right now and various other places, there's a lot of opportunities if Exxon wanted to go hunting, and we're really worried about losing their reserve replacement rates.
Yeah, that's a really good point that they haven't replaced 100% of their reserves. Taylor, do you think this is just to make sure that dividend stays?
Well, $12 billion is the dividend, so that's for 1 year. They could cover
what
it
a coincidence.
with that $12 billion. I don't think that they're necessarily worried about that dividend this year. I don't think they're going to spend $12 billion on an acquisition either. But if they did, there's some companies out there with a market cap under $12 billion. Granted, you're going to have to pay a premium for these companies, so they won't be able to spend on a $12 billion market cap company because they're going to ask for a premium. But you're looking at companies like Devon Energy, Marathon Oil, Continental Resources, Cheniere Energy might be an interesting deal because they could source their own natural gas and then export it. So there's a few companies out there that have interesting stories behind them and have seen their stocks plummet. I doubt they'll spend all $12 billion on an acquisition, though.
Well, at the same time, the last time they made a major acquisition was XTO Energy back in 2010, and they did tap into their massive reserve of bought back shares when they did that too. And we could say they have $12 billion in debt ready to kind of pull the trigger. They have $230 billion in treasury stock that they could use to go jump at somebody if they were really inclined to do so.
You're probably going to look at an acquisition of a company whose shares have declined further than Exxon's, though. Otherwise, you might not be getting as good of a deal on your shares because Exxon shares are down as well. But yeah, that's a huge...
That's a pretty big war chest right there.
Huge war chest.
Yeah. Can you guys imagine
bigger than most
Howard Ham selling out to Exxon?
Yeah, it would be pretty interesting.
I would be
probably
surprised.
Relieve a lot of stress in his life.
Right. Well, yeah. Anyway.
And turn those shares that he has into actual money rather than a depreciating asset.
He took out $1 billion loan to pay off his ex-wife.
Yeah, well, because he knew his shares were in the toilet, so he didn't want to use those to pay her off.
Fair enough.
Cool. All right, so last segment. We've got a mailbag question from Carl in Virginia Beach who writes, in recent quarters, we have seen some oil and gas companies write down the value of their properties and some have not. One company that is not is Continental Resources, speak of the devil. They have a huge debt load as well. Are they being honest by not writing down their properties? Sincerely, Carl.
I'm just laughing at Billy Madison.
Yeah.
Carl, nice to see you. So about writing down assets, that's a tricky game with oil prices fluctuating like they are. It's a pretty company dependent thing. As a shareholder, obviously you're going to want to have your own opinion about how these companies are handling their assets, and especially with oil and gas companies because asset values do fluctuate pretty frequently. And Continental Resources has been, I guess, maybe one of the more bullish companies in terms of the speed of the turnaround they expect. So maybe they're not as quick to write off their assets because they think it's going to turn around. But if it doesn't, they could see those write-downs a little bit later than most and catch people off guard.
There are certainly some accounting things that can go on when it comes to oil and gas valuing properties, but there are some rules that are applied there. They're normally done by an independent ratings agency or an evaluation company that looks at their properties and says this is economical at such and such a price. At their most recent 10K, it said that the price that they were going on was $50 a barrel, which was the trailing 12 months of 2015, which is standard SEC protocol. So we can't really knock them for not going at SEC protocol. And so it doesn't seem like they're really doing any trickery based on the current accounting. They brought on some new reserves that they actually, because of cost cutting and more better economics, they were actually able to add some stuff that was kind of what they would call technically recoverable, but now it's economically recoverable, that helped to replace the existing reserves. And then when you kind of add all those things together, it doesn't look like they're really hiding things in comparison to some other people. And also, let's take into account over the past 2 years, they have written down $1 billion worth of their asset properties. Maybe they just didn't do it this particular quarter.
Got it. Cool. All right. Well, have a good one, guys. Thanks always for your thoughts.
Thank you.
If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com.
Be
again,
like Carl.
That's right.
Be like Carl.
Be like Carl.
Be like Carl.
And again, that is industryfocus@fool.com. And as always, people on this program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks. So don't buy or sell anything based solely on what you hear in this program.